This is Coca-Cola on the monthly chart, and you can see that prices are down from all-time highs at near the $64 level. And when I look at current price, I go down and to the left. Well, we can see that this month we put in potentially a short-term low at $52. However, uh, I'm looking at these previous pivot highs as really potentially a floor. I do like the round hole psychological number at 50, so let's just make a note of that. Now, before we continue with the analysis, let's look at this video article. It is coming from the Motley Fool. Coca-Cola stock, buy, sell, or hold. Few companies are better representative with a blue chip stock, such as Coca-Cola. They're the world's leading beverage company. Been around since 1892 and built one of the most recognized brands in the world. Flagship soda is easily their best seller, but over the years they have expanded into other type of beverages, which includes coffees, teas, juices, plant-based drinks, sparkling soft drinks, water, and alcohol ready to drink. Keeping customers and consumers at the forefront and being able to adjust to their changing preferences has been key to Coca-Cola's market dominance across different categories. Coca-Cola has a transformational innovation team whose job is primarily to introduce beverages in emerging categories, and the specialized focus seems to be paying off. Unlike PepsiCo, which has branched off into snacks as well. A large part of why Coca-Cola can operate with such high margins is because of its sole focus on beverages. Instead of spreading itself thin, Coca-Cola can focus its resources, expertise, and strategies on continuously improving and expanding its core business, one of which is its distribution chain, one of the strongest in the world. Um, and so they have a somewhat of a moat in terms of distributing their products to getting to the end user. The past 20 years, Coca-Cola has returned just below 150% when looking at its stock price. When you look at its total return, this percentage jumps up to 350% thanks to the company's lucrative dividend. That's very nice, which will make Warren Buffett very happy to hear, as he is one of the largest shareholders of Coca-Cola stock. Coca-Cola's current quarterly dividend is 46 cents, with a trailing 12-month dividend yield of around 3.3%. That's more than double the S&P 500 dividend yield of 1.6%. Perhaps more significant than Coca-Cola's current dividend is its emphasis on increasing its yearly dividend. So Coca-Cola has increased their yearly dividend for 61 straight years, the 10th longest streak in the U.S. stock market. And it's what you like to see as a dividend play. Dividends just keep rising over time. It's definitely a dividend aristocrat, meaning that they've been able to issue dividends, increases in dividends over the last 25 years. All right, so its dividend payout ratio, which is very important, can the dividend be sustained? It stands at 56%, meaning the company has plenty of breathing room to keep increasing it without jeopardizing other areas of its business, which means that their cash flow is and free cash flow is at adequate levels to continue to support the dividend moving forward. Coca-Cola has a strong financials, a competitive moat, not likely to be threatened anytime soon, and a competent management team that has shown it has the ability to navigate ever-changing market conditions. Investors considering Coca-Cola can feel confident in its proven track record and its path towards continued long-term success. All right, so now kind of going back to the charts, we're going to go to the weekly chart, and safe to say we had a bounce so far this week, and safe to say that we put it in a current short-time low, and kind of looking at this $52 level in the past, support, resistance, support. Now we'll look at the weekly chart. I see nothing but smooth sailing to the upside till we get it to about the $58 level. where you do have a drop, two basic candles, and then the drop over the last couple of weeks. Let's put a line at $58, and let's scroll down to the daily chart just to confirm. All right, so short term, again, you have the makings of potentially a W pattern, which is a reversal bullish pattern. You do have a little bit of resistance that's going to come in at the $55 low. That's about 90 cents higher. But I would say your main resistance at the moment is going to come at $58, where you had a lot of trading that took place back in September. So if and when price gets here, price should stall. I would anticipate much resistance in these little levels. Again, $55, $56. So it's not a bad time to potentially get in. At least take it to $58. It's not really, you're not really getting in as a growth play or cash price appreciation play. Mainly, you're getting in as a dividend play. If you have a chunk of cash, look and just put it somewhere somewhat safely while you collect some dividends to offset some of that inflation that we see that's taking place in the world. Thanks for watching. Subscribe. Please like the video.